What's up, guys? I'm Shane Schofield, and I'm the founder of ScofieldTrading, and I've teamed up with Ty Vinnick, and he is a hedge fund manager over in Beverly Hills. And what we're basically doing for you guys is giving you a weekly video reviewing the markets and potentially being able to come up with some good ideas for successful trades and potentially where the markets are going to be heading. So this is the disclaimer. So if you guys just want to pause that and read through it quickly. And here's just a personal introduction of myself. I'm Shane Schofield. I'm the founder of ScofieldTrading. I trade US equities, and I'm a technical trend trader. I'm also a public speaker. I manage a private fund. I started off spread betting from home with little and no experience many years ago. And I turned a 4-figure account into 6 figures in the space of 18 months. And that story is available on our ebook, which is on our website. And it basically tells you the story of how I did it, and more importantly, it shows you the accounts of the actual trades and the actual returns, which is quite interesting.
Yeah. Hi, guys. My name is Ty Vinnick. I'm a portfolio manager. Started my own hedge fund about 3 years ago out in California. Our fund is Ace of Swords. United Global Funds is just a landing page. Unfortunately, we're not supposed to advertise by current laws, but I am definitely free to give my opinions of the markets, and it's actually quite interesting. I love cooperating with Shane, and I found what they were doing to be extremely interesting, and there's nothing I'd like more than discuss markets. So let me give you a little bit of background about myself. So again, my name is Ty Vinnick. I'm a managing member, and I founded with a partner the Ace of Swords LP US-based hedge fund. I specialize in trading options and futures on different market indices, commodities, futures, etc. I have a lot of experience with the professional type of money-making strategies, so that includes selling options and doing specific types of bets that's usually not practiced by retail investors, which is something I would like to share here. I'm a technical and statistical trader, and I time the markets by doing strategies of this sort. I think my experience is a little bit different than Shane, a little bit more academic, a little bit more on the professional side, and this is where I felt we can bring a lot of value in bringing these two worlds together.
Yeah, just different opinions from different backgrounds. I think it always helps when it comes to trading. So it's perfect.
Yes.
So
It is.
If you guys want to get in touch, feel free to email us at contact@scofieldtrading.com or visit the website, and that's also the phone number. So yeah, let's get into this. The first thing we want to review is the Dow Jones, and the date today is the 14th of May, and recently the markets have just been trading sideways. They've not really been trending in any certain direction. I'm just going to throw in a trend line from here. It's been in a nice uptrend line since that November election got finished, and if you can see at the moment though, price action is actually starting to wear out. So on the Dow we haven't been able to break up to new highs, so it does seem quite weak at the moment. And if you look at the MACD, you can see that it's also making higher lows. So you can see that the sign here is actually looking quite weak at the moment. So if we also go to the sentiment on IG index, we can see that currently we're sitting at 70% short. It was actually a lot more than that recently. That's come down a bit. So the markets at the moment is looking more weak than they are strong. I also want to show you guys a few trades that could be a good potential setup. One company that I'm looking at is called Biozen, which is a e-commerce company, and they're from China. And I think the company is really good looking at the fundamentals. They have a forward PE of just 17 when they've got the average PE on the S&P at around 25. And they're actually a really great company. They've got some really great clients. Some of the clients are Nike, American Apparel, Zara, Guess. So, you know, massive clients. But if we just simply go back to the chart and look what the chart's doing, because we always let the chart tell the story, you can see it's been in a very good uptrend. and potentially at the moment it's breaking out. So I think this company could do extremely well. Also, we have earnings for this company coming out on the 22nd of May after market close, and I think they could potentially give some good feedback on what they're doing and the results. And obviously nothing's guaranteed, so obviously have your stop loss in the right place and always limit your risk. But I think this company could do quite well.
So you would buy this company on a pullback?
I wouldn't actually wait for the pullback. I'll actually just get in now because it kind of broke out and it's kind of retesting that new high level. So I think now could potentially be the perfect time to get in as long as the stop loss is right. And I think if all goes well, it might not see this level again if it keeps on trending to the upside. Interesting. And another company that I've been looking at is CRM, which is Salesforce. You can see from this chart clearly that it's in a nice uptrend since the beginning of the year, and that is perfect. And at the moment it's breaking out again to new highs, and this company has earnings coming out also on the 18th of May after market close. The forward PE is quite high, but not as high as other companies. So we're in a technology boom at the moment. And if we look at other companies like Wix, for example, you can see that their forward PE is higher. And you also get the same when you look at companies like Shopify. Also very, very high forward PE. So I think that this company could potentially be an undercover one at the moment and could potentially do very well. The only thing that does worry me a little bit, there's a lot of insider transaction at minus 77%. So that could be a bit worrying, but of course we want to always limit our risks and have a tight stop loss and see what kind of reviews that we get when the earnings come out on the 18th of May after the market closes.
So would you wait to buy it until after earnings, or you feel that a lot of the gains could be made already by then?
No, I think now is actually the perfect time to get in from this breakout, as long as you have a potential good stop loss, probably around $83. I think yeah, as long as the risk is just limited, I wouldn't be surprised if this company easily hits $100 in the next few months, providing that the market's still stable and it doesn't has a big correction. I think it could do quite well.
Yeah, I think that's a fair estimate, especially looking at the Dow. As long as the Dow doesn't break that trend line to the downside, isn't it?
Yeah, definitely, 100%.
So we should move over to the S&P 500, do a quick summary of that. Here it is. So it's very, very similar to the Dow. A little bit different, but quite similar. Some people would look at this structure and say this is a potential reverse head and shoulders or cup and handle or whatever kind of other bullish type of structure they will find, which I don't necessarily disagree with that. There is some kind of high risk in buying these late stage structures is what I would call it. So this late stage structure, a little technical difficulty in there.
And just to confirm, these are daily charts, everyone. So
these are daily charts. So the way I see this is an inflection point. The inflection point is getting narrower and narrower. It's unnatural for the market to be in such an extremely narrow range. Usually narrow ranges lead to breakouts. In this case to the downside, similar narrow range leading to a breakout to the downside. Here, a similar narrow range lead to a breakout to the upside. My suspicion is that this will break to the downside, and I will take you on to another chart to show you why I would think that. I will take you here to the volatility index. So the VIX index, essentially called the fear index, measures the value of puts versus calls on the S&P. So think of it as downside versus upside bets. And downside bets at the moment are very limited, which means people are feeling very confident in the market's ability to go to new highs and even higher. You can see that the VIX index,
when this goes down?
So when this goes down, the level of option protection that is being bought against long portfolios is very low, which means that the market is showing very low levels of fear at the moment. You can think of it as nobody's buying insurance against long portfolios, or nobody is actually making any downside bets on the market at the moment. Here, for example, during Brexit, you can see how the market spiked very far to the upside. And while this was going on, you had very high levels of fear. And then when the market calmed down, nobody's interested in downside insurance, and then the market came back up. So these usually coincide to bottoms on the S&P, while very low levels of volatility coincide with up bottoms on the S&P. So if you're familiar with gap analysis says that over time gaps are going to get filled. Gap is a place in the chart where no trading takes action, like here or here, because all action took place in the overnight and the market just opened lower or higher by the amount of the gap. It may take days or weeks or months for these gaps to get filled, but at the end, most of them will get filled. In stocks, less so, but in volatility, they always get filled. You can see here this gap in June of last year got filled within a few days. This gap got filled actually within a few months. But we're having this very large open gap here on the VIX chart that happened the day following the second round, the first round of the French election, where the VIX went from 14 all the way down to the 12s. So when this was going on, you essentially have not filled this gap up yet. This tells me that entering a long position in the S&P 500, I can go back into it to show you, is extremely risky. So entering a long position in the S&P 500 can be very risky because we know that gap in the VIX is going to get filled. This is probably equivalent to here. So if that happens, this trend will break to the downside. So at the moment, I would say no trade is better than making a trade right now. Definitely one to the long side. Very aggressive traders can try to take an attempt with a small position on the short side with a stop loss probably above these highs, targeting the lower end of this range. If one must put a trade on the markets, I think that will be the trade, targeting the bottom end of this range with very small potential risk. But it would be good also to not put a trade at all, but we know that at some point that volatility gap is going to get filled. So if you ask me what trade would be a good macro trade to take, I would probably be looking at gold. We can look at it right now. So here in the gold chart, one of the reasons I like gold is that it's not correlated with the rest of the markets. You can be trading a portfolio of stocks like the two stocks chain suggested and trade this gold chart and treat each one as an individual. They will be non-correlated, and the more non-correlated positions you have in your portfolio, the more diversified you are and the more likely you are to make money in the long run. Gold is very technical. You can see here this lower end of support was very consistent over a good few months. A warning sign, though, was here, is that it was making lower highs. While this was going on and the floor was basically staying the same, the market was making a series of lower highs. So you had a hint that at some point the support level is going to be broken, and it did. And as it broke down, it tested what was support, has become resistance, and broke into a strong downtrend. But as always, nothing lasts forever, and this downtrend that lasted for about 6 months ended in December of last year, and a new uptrend started in the gold market. As we can see, gold has these very strong levels of support and resistance, so we can draw these lines again, and we can see that this acted as resistance initially, turned into support here, broke down. This level now acted as support, and the market went to new highs. So what do we have now? We have one high, one low, one high, one low. We can expect that if this trend continues of higher highs and higher lows, we're probably going to make a new high above this level. So this would be a good low-risk entry point. We can put a stop loss slightly below 114 and probably target somewhere around here as a new high. So, we're risking about 2 points to make potentially 8 points. I like that risk-reward ratio a lot. So I wouldn't necessarily force a trade on the S&P market or any of the broader indices, but this could be an interesting trade for in the meantime. And that's my 2 cents on it.
Yeah, sounds like a perfect setup to me. Especially the fact that you're having such low risk to get such high reward makes perfect sense.
That's kind of what I like. I like trades that have the low risk versus high reward. I prefer to buy pullbacks than I do breakouts because I feel like they would be a good entry point. Or what I found that a lot of times when a stock breaks up or down, it's usually going to test the area in which it did it. Here's a perfect example. You see this breakdown takes place. You could have shorted this breakdown and eventually you would have made money, but you would have taken some heat as it came back up. Maybe about 70% of the time, the market will try to come back to an area in which it broke down from. And as it does that, this would be a less risk entry point in a short position. Yes, you would have waited, may have been frustrating to wait a month, but you would have had a perfect trade here almost all the way to the bottom. So I feel like now the market's proving to us that it wants to go back up. It's doing it from the support level. We're seeing these higher highs and higher lows. So I feel like this would be a low risk entry point.
That's true, but then again, as long as you got your stop loss in the right place, then that line should always act as sort of resistance or support and not hit it, and then continue into the trend.
Always limit your losses because once you let things ride, and at the end of the day, the market does what it wants to do. All we can do is limit how much we put in and put out.
Yeah.
We exactly. So even if we're right 50% of the time, and when we're right, we hit that 1-to-3, 1-to-4 risk-reward ratio, we're going to end up making a lot of money.
Yeah, makes sense. So anyway, guys, we're going to be giving you these free contents every single week, reviewing the markets and giving you free potential trades, giving you low-risk, high-reward returns. Just feel free to subscribe to our channel, and we'll keep on providing you videos. And we look forward to speaking to you guys.